Evening, ladies and gentlemen. Welcome back to another Stocks to Buy Live. I think we're like on episode 40 something. It's crazy that we were just hammering these every damn week. Is today? Yes. Imagine selling Google. That is the contemplating question that we have here. Because yes, I sold my Google shares. I'm going to explain to you why. We're going to actually walk through Google's kind of play for the next 5 or 10 years or my thoughts around it, what I've been doing with that money. We're going to talk about the hottest stocks this week that have just caught my fascination. We're going to be talking about Starbucks tanking, what that effect had on some of these social media influencers like PPC Ian, which I think is fascinating for dividend investors. We're going to talk about Toronto Dominion Bank when it comes to drugs and fentanyl and all the stuff that's bringing that stock down 5%. And then, of course, the spark that lit everything that we've had this week, which was the Fed in between earnings that really excited the market, which was kind of shocking to say the least. It feels like we have survived a hellstorm of fire. I mean, if you watched anything from Meta tanking on incredible earnings to, Tesla popping on terrible earnings to this inverse and outverse stock of Apple rallying, Meta going up or Google going up, you got, it's been a pretty healthy week of, I think, we can kind of breathe, right? We got through the latter half of earnings from consumer staples to your likes of Walmart's and Costco. Everything is just doing la-di-da. Things are pretty good right now. So let's talk about and zoom in a little bit before we start talking about the broad view here. Why, in the midst of all this incredibleness, am I selling my Google position? Well, I want to break it down into a few bits and pieces, and then we're going to talk about, the more particular reason that, like the hammer and nail that I think has Google kind of hung up right now. And there's been some stuff that I've just been reading through with the people internally related to Google and how they're saying that we are not in the easy time we once were for this company. When it was just straight to the moon, 2020, Google search dominated, just took over the internet, baby. It won that game. But that game is changing, as it is for many companies in this ever evolving place of innovation here. And like I said, the thing that I love about Google is I don't think people understand how big it is, right? It's like Meta. Half the world's population is using one of their products at least. This is a conglomerate that isn't going anywhere. I'm by no means bearish on Google pretty much for the entirety of this year, probably for the short term nonetheless. But when you break down their revenues, there's one aspect of the business I want to focus on, because if I could own YouTube individually, if I could own their cloud server, if I could own any other businesses in a dominating fashion, I would do it in a heartbeat. You got to understand, YouTube is so much bigger than Netflix is going to be. The margins are higher. Everything about the ecosystem of YouTube, people dealing with TikTok getting banned, all those people are going to come to YouTube Shorts eventually. They're going to come to YouTube's ecosystem, because it's where all creators end up having a lot more stability of income and sponsorships and reliability. It's just a cleaner functioning system, and just it's an amazing thing. I think it's the best network above Amazon Prime, you name it. No one, even Apple TV, can't compete with what YouTube is. It's probably one of the greatest businesses that has ever emerged for allowing people to basically become their own version of Hollywood. It's a beautiful thing, right? But what you have to look at here is Google, more than half their revenue, right? Of the $80 billion they brought in this incredible growth rate, $46 billion of that, one of the largest contributing growth factors to the whole company, is Google search, right? And we just had all that media come out saying, the end of Google search is no more. Everyone thought AI and all this stuff was going to take over Google. Clearly they're not. And we're going to discuss kind of the format here moving forward, because again, I think this is the real debate that you have to have with Google. And I've been relentlessly arguing with people in the other direction, which is what I'm going to do for you right now and tell you why it's likely Google is going to continue to win search. So we're going to take a few different things out of Gemini, which is a literal free, search bot that Google is letting you use. We're going to compare it to Meta's, because Meta just dropped their, AI platform on WhatsApp, Facebook, and Instagram. If you use those platforms on your phone, I'm sure you've seen what do they call it? Llama? What is that? What they call it? Llama? I'm trying to remember what the Facebook one is here. But anyways, if you open up your WhatsApp, you can go on it right now, and you'll see that Meta AI is the first thing that'll come up at the very top you can use for search. So let's just do a comparable across kind of these three major, categories when it comes to Microsoft's ChatGPT, Meta's version against Google, right? So I just asked some variant questions. We'll talk about weather, we'll do some summaries, but let's start with what are the 5 largest companies in the United States? I'm interested in stocks and companies. Of course, this will be one of the first things anybody would look up. And Google gives you this beautiful little summary here that are two main ways to measure the size of a company: by revenue, how much money the company makes, or by market capitalization. And we can learn something here, because I'm sure most of you are probably unaware that, Walmart actually makes more revenue than Amazon does. Kind of a mind-blowing fact. Amazon the number 2, ExxonMobil, Apple, United Health. But if you're talking about market capitalization as of May 5th, 2024, Microsoft, Apple, Nvidia, Alphabet, Amazon. Beautiful. This is like exactly what you would see if you went into like the S&P 500 right now. Perfectly done, and a lot of different things that I wouldn't have known otherwise. Great. So let's compare it to the ChatGPT. As of 2024, the 5 largest companies in the United States by market capitalization are Microsoft, Apple, Nvidia, Amazon. So it's giving us the right order. It's giving us a link to where this is coming from, interestingly enough, for these companies that lead the market in their respective sector, ranging from technology, online, retail. You can have this magazine CEO world, which is kind of interesting that I don't know if it's just linking there, if that's where it's getting the data from, but this is good. It's fairly accurate. Great. It's not as in-depth as Google, but hey, it's still accurate. And then we have, Meta's version here that I'm just doing off WhatsApp, because I don't really know. I didn't look too. I'm like, WhatsApp is probably the cleanest way to use this search. I mean, it's the equivalent of opening up a browser page. Let's be real. But basically, Walmart. So this is what's hilarious is it can't even link Amazon. Look at this. It says linked unavailable. It's like, what? It's like, how did you forget Amazon is number 2? So for some reason, it's not allowing us to see Amazon. We got Apple, ExxonMobil, Shell. Maybe Meta has some beef with Amazon. I don't know, but you can see that they're pulling this from Investopedia here by the looks of it. I notice a lot of the financial stuff that I've tried to look up through, Meta here. They really link Investopedia a lot. So I'm curious if they had some kind of partnership or where they're getting their data from that's, mining these large language models to kind of give me this information. Because do they have a partnership with some of these people? Were they paying them to get access, or are they just pulling it for the sake of pulling it? Do they have licensing? But I don't know what the deal is, but it's fascinating. So, we got 2 different approaches. So Meta's focused on revenue. You got, ChatGPT is focused on, market capitalization, but Google gives you both. Fascinating. Again, I am just asking the exact same question in a very generic fashion to each of these, and I'm just showing you what the results are. And you can see, like, for this first question, Google did a pretty good job. So let's ask it the weather. This seems, you think this would be pretty redundant and simple. It's one of the most common things that is Googly searched. The weather. I mark them, close to where I'm living. Nothing too close. Don't need anybody snooping too hard for my address here. But we're talking about 16 degrees, mostly cloudy. We got the forecast for the next few hours into the morning. This is great. This is literally the weather. Okay. This is perfect. It's pulling off Google weather, whatever. ChatGPT says in Markham, Ontario, the current weather is 66 Fahrenheit with cloudy conditions. The temperature has been hovering around the mid 60s throughout the day, and it's expected to decrease to about 43 Fahrenheit tonight with partly cloudy skies. Looking ahead, the weather for tomorrow is forecast to reach a high of 68 Fahrenheit with sunny conditions. This is pretty good. It's not great, but if you were using it through like a chat bot thing, or you're just, like Siri, you're just yelling this out, hey, what's the weather? And it gave me this would be pretty good. Keep in mind, we're in Celsius because we're in Canada, so it's not really doing the Fahrenheit adjustment there very well. But still, hey, it's not bad, all right? If we compare it to Meta, I don't know what happened here, Meta. You couldn't find Amazon, and you think the temperature is 27 Fahrenheit. It's not negative weather anymore. We're nice here, baby. If you live in the area, it's nice. It's a lot higher than 27. it's closer to 60, 66, right? So ChatGPT could do the weather. Somehow Meta, I don't know where it's pulling this weather data from, but it ain't 27 Fahrenheit out there, folks. So Meta's got some work to do, right? Like they're barreling this around a little more challengingly than accepted. So let's do what most people use chatbots for, to summarize articles, use it for work-related stuff. So I went ahead. If you didn't watch the recent Warren Buffett interview, I highly, highly recommend it. It's one of those rare things that in the investing world is just a true gem, a true, heavenly godsend is listening to Warren Buffett. Rest in peace, your soul, the late Charlie Munger. But Warren Buffett's still in his 90s, being able to do those kind of talks. And Tim Cook showed up, all these major CEOs and people all over the world come to ask him questions. Beautiful thing. You got to go watch it if you are into investing. But this article talks about how Berkshire, basically cut their Apple position, by about 13%. And it just kind of summarizes it. So I highlighted this entire article just like anybody would. And I asked, Gemini to summarize it. So if we open her up here, we just kind of see what Gemini said. And what's neat is it gives me a multitude of drafts. It just shows me a bunch of drafts. I got other options, but it says Berkshire, led by Warren Buffett, reduced his stake in Apple by 13% in the first quarter. And obviously, this is the second quarter in a row that Berkshire has trimmed its holdings in Apple. Buffett suggested tax reasons for the sale, implying he wanted to avoid, potentially higher tax bills in the future. Despite the sale, Apple remains Berkshire's biggest holding, and Buffett continues to praise the company. Apple stock price has declined slightly this year on concerns about future growth, and obviously, with Buffett selling it the way he's been selling it, it's put some negative pressure on it as well. But let's see what ChatGPT does. Warren Buffett's Berkshire Hathaway reduced its Apple stock holdings by about 13%, equating to roughly 116 million shares in the first quarter. The value of Berkshire's remaining Apple shares stood at 135.4 billion. We're getting actually a lot more data now from ChatGPT, still making it the largest holding in its portfolio. This sale follows a previous reduction of about 10 million shares in the previous quarter. During the Berkshire Hathaway annual shareholder meeting, Buffett mentioned that the sales were partially motivated by tax strategy considerations, anticipating potential future tax rates, increases in the United States, fiscal deficit, blah, 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 blah. We kind of go on here, but this is pretty in-depth, right? And they also noted that, Apple has basically announced a $110 billion share repurchase program, a record, despite a recent decline in the overall sale of iPhones specifically. This is much better done than Google. Google gives us some other options, but that is, for the first take at it, that's pretty damn good. And then we ask Meta. Let's see what Meta came up with here. Warren Buffett's Berkshire Hathaway cut its Apple stake in the first quarter by 13%. They all seem to grab that headline just the same. Berkshire Hathaway's first quarter earnings reported release on Saturday showed that the company's investment in Apple at $135.4 billion. This marks the second quarter in a row that Berkshire has trimmed its Apple holdings. Apple remains Berkshire's biggest holdings, but Buffett suggests the sale was for tax reasons. So obviously, I think of this search specifically, ChatGPT has this pretty down pat. But what we're noticing here is that it really just depends on what you're asking and what they're trying to do. I think Meta comes in third place if we're ranking this by far. But what you got to ask yourself here, and this is just the fascinating thought about it, is what does Google have to lose from competing with all these other chatbots? I mean, that's the question you got to ask yourself, right? Like, Google has everything to lose, literally everything. What does Meta have to lose in search? Nothing. They only have something to gain. What does Microsoft have to gain? Like, what do they have to gain in search, or even like everything? They, like, even if they get 5% market share, like, I think, this did a beautiful job at summarizing this. And then I'm going to talk about the hammer and nail that will dictate like what could potentially happen in the future with Google. But this I think like also hit really close to home, though. I found this after I sold Google and I was like, wow, this was kind of in line with where I was going. But take a listen to this. This is kind of great.
You might be sitting here in 3 or 4 years watching Meta have, I don't know, 10.
Nobody has to win search. It's just that Google can't afford to lose anything.
Yeah. Everybody
takes a point here and a point there, and all of a sudden Google could be in the high 70s of search, and that would be economically disastrous for their stock.
Yeah. You're going to have to make cuts.
Why do you guys think the stock is down?
So I think this summarizes like a huge, huge point to like Google's future, because honestly, I think the hammer and nail purely resides in what Apple decides to do with their future search, because I use Siri for a lot of things. I use Siri to send texts while I'm driving. I use this voice to text for a lot of different things. It's just a matter of like, how do you get into a future now where there's so much competition for Google search and Google kind of maintains this growth dominance? Because if you look, and it's really hard to find, I can't even really find anywhere. Look at, when you go on Meta, they show you the daily active users. Google isn't showing you like, how many new searches are really being done a day. Like, Google doesn't talk about it on the earnings call. They don't do slides on it. Google doesn't want to talk to you because what they're doing right now is they got rid of ad blocker. Like, they're trying to compete with ad blocker. They're looking to refine and dine their margins and increase the value of search. Because right now search is going up because people have to spend more to get more conversion because we're in a tougher market environment. I was watching some stats, just going through a lot of that data as well. And you can kind of get the sense that Google is starting to reach parity with the market in their current, not YouTube. Again, I am just purely talking about search. Search is reaching parity because you can ask, Amazon, if you have like one of those Amazon home things, you can ask that a lot of weird crap. You can ask your iPhone a lot of weird stuff. And if Apple at any point in time decides that they are going to start competing in search, which I'm waiting to find out, because I said, like, if they partner with Apple, they're set. Like, I think the only reason Google has had such success that it's had is because it is partnered with Apple to be the dominant search browser, and Apple didn't want to compete with them. They were worried they could lose that competition, right? So that's what kind of concerns me with Google, because unfortunately, And again, I'm hyper bullish on Google. All right. Like you go for the next few quarters to probably 1 to 2 years out. Google's not going anywhere. I think they have a great growth trajectory for the time being. Like you could hold it for sure, but I'm looking like 5-10 years out. Like I'm holding Google for 5 or 10 years. That was my initial goal buying the stock. But I have to ask myself, like any point in the next 5 years, if Apple decides to take on its own version of search or enhancing Siri through some large language model, if Microsoft steals a few percentage points, and like they said, if Meta ends up taking a few percentage points, because you don't have to go to Google to search anymore. I can search right when I'm in WhatsApp. And it's just hitting me now like a bag of bricks. I'm just like, if at any point in time the growth stalls out on search for Google, it is going to be unbelievably detrimental for the stock, which is a shame because like they have this runway right now to basically prove that Gemini is the best. They don't have a choice. They have to prove it's better. They have to be able to run ads through it, and they have to like draw that attention there. But at the same time, they're fighting desperately to scale up these other like aspects of the business because they're in this runway time right now where they need to get these other businesses to a point where the growth can kind of make up any loss that they're going to experience in search. And they're getting there. I mean, by all means, the growth in YouTube is insane. The growth in like their networks, not actually doing anything. YouTube's really the only other search network for them that's growing. But I mean, you take a look at something like Cloud, right? Like Cloud is growing at an exponential rate from 7.4 billion to 9.5 billion. Like I said, it's just a matter of if you don't think Google's like a not safe stock to own, it still has that risk. That is like one of the most, I honestly think Apple is a more cleaner stock to buy, which we can talk about on an individual basis. And don't get me wrong, it's not like I don't own the stock because I mean, at the end of the day, all this money is just permanently being pile driven into the S&P 500 anyways. I just want to recognize that like I'd have to play this game where like I'm holding the stock and I'm praying to God that like news eventually comes out that Apple is going to be like, yeah, we're just going to partner with Google to build out our enhanced search, or, that Google's going to be like Gemini is now taking a huge percentage of market share and is proving to be the better, large language model or something. But in the meantime, we're kind of just playing in this field of there's a couple mine shells that are going to be coming up. And if they step on one of these mine shells, I mean, the stock could easily drop, a dramatic amount. Like, these mega cap companies, even though they're in an incredible place, it's just you have to recognize the growth of these companies are insane. And Meta or Google's fighting desperately to keep its dominance in this thing that it needs. Like it needs this for its stock. And I get that they're issuing a dividend and all this stuff, but it just comes as a bit of a concern to me. And I just have a hard time stomaching that specific risk because I got to pay hypertension. And here I am buying Tesla and stuff like that, right? So at the end of the day, Apple is going to control everything. I think Apple truly has a say in Google's future. Doesn't matter. Even if their Gemini sucks, so long as Apple decides to continue the partnership, I think they'll be fine. But I would be hyper careful nonetheless. Again, just like, I mean, this is a beautiful thing to see here. So let's see if Google can get through the next couple years. 2 to 5 years, I think, is going to be the real risk reward for them and how they pan it out. Because I think they're dominating. I don't think AI matters as much right now. But these other search features that are becoming hyper easy to click on without actually going to Google is like something you got to be worried about. Because every time I search something on Meta's app or ChatGPT is one last search that Google's able to make money on. But nonetheless, let's get into a couple comments and questions here and talk about the big news with some of these other stocks. And then we'll show you my portfolio and we'll take a look here. But I like this one comment. Apple is not saving the stock market. Their revenues are down. They're only using their cash on hand to buy their shares to spike their share price. Nothing new here. Yeah, we talked about the dominance of big companies and how they're able to manipulate their stock prices, because as I told you before, you get to a level where it doesn't matter if your revenue goes down, because when you're buying shares back, you can make your earnings look as good as you want. And I think this is appropriate for Apple, but so here's the thing with some of these big tech companies too that always concerns me a little bit, because if you go back to where, like, I don't know, let's just take a look at, say, September 14th of 2020. How much is Apple up? It's up 51%. So that's from, let's just keep a date on that. That's September 4th of 2020. Okay, so we go into like VOO, for example, and let's just take a look. And let's go to September 5 years of 2020, September 4th or whatever of 2020. So you can see the S&P 500 is up like 71% against Apple's performance, right? So even with like these mega cap companies, where we're at in this market cycle today is just a lot of uncertainty that like also kind of, just makes me put the brakes on a little bit. But I'd be so comfortable buying Apple here. But I'm just saying, like, even though these companies look great, even though Warren Buffett owns it, like a lot of circumstances, you're sometimes just better off buying the S&P 500. And this is why like this has become such a huge position for me after the pandemic. Because, I was living the dream from 2014 to like 2020. Like I couldn't do no wrong. The pandemic destroyed the market. We went so heavy in on a lot of individual stocks. We made small fortunes up till 2021. Half the reason I've been able to buy like the property that we own here is because of how great. If you want to watch Dumb Money, the movie, I think it perfectly resembles like a lot of us that found a lot of success in a lot of stocks that pump. But we're in this phase where like that reliability is so hard to find, and I feel like we're just starting to get back there. But I had so much fear built up in me. I recognized that like all my stocks were individual, right? I held things like Pfizer and all these tech companies and all this stuff. And, I started getting that in deep uncertainty. Like I can't predict what's going to happen tomorrow. So I decided at that point to sell off the vast majority of my individual stocks. We put most of our money in the S&P 500, things like SCHD, to diversify the risk. So that way, if Meta goes out of favor, if one of these stocks go out of favor, they're not like a huge position making up like a 5 or 10% stake in our portfolio. And we would be seeing a massive detrimental, stock drop like we did with Meta that went all the way down to 90 before recovering back up to the insane levels that we have now, even though my wife is a genius and she held through it, but I still didn't want my shares in it and her shares in it because it was a huge position in our portfolio. So I feel like, I'm just starting to ease out of that psychological condition of like extreme uncertainty. And again, I'm not a guy that'll ever sideline the market, right? I'm always going to be in the market, but sometimes I'm going to do it in different ways of risk. So yeah, I went all in the S&P, and that's where like a lot of my security money goes because I just feel like I can't do no wrong there. And it's continuing to do exceptionally well against a lot of individual stocks that I help a lot, which is why I'm kind of come to that raw conclusion that at scale, and this might not be true for you. Again, if I was 20 years old, I don't know what kind of mindset I'd have. I can't tell a 20-year-old how to invest. I might be the same way I was when I started investing at 23 and just own like 2 individual stocks. That's all I owned. The first companies I ever bought were 2 stocks. That was it. Those 2 stocks rode me to insane gains, and I felt like a genius. But I don't know how to tell someone to invest. But when I get to scale, at the scale of my portfolio, sometimes you want like simplicity, right? Because between mine and my fiance's portfolio, we do own a lot of individual companies, and they make up about, what did I say? Maybe it's like 15 to 20% of the entirety of our portfolio. The rest of our portfolio is just getting cost averaged into these big ETFs to just kind of ensure some reliability, right? So that's kind of just where I put my Google money, and I'm very happy to say that my VOO position is now worth about 148,000 CAD. It's like 109,000 US, which is the first time ever actually it's crossed over 100K. So it's kind of nuts. And then on top of that, my dividend yield was able to get up over 5,000 annually, which is cool. 2.28% on the entirety of the portfolio, which isn't bad. Ideally, over time, I want to keep cost averaging into VDY to try and get it up there. But yeah, we'll see how this goes over time, because I'm still going to be scaling Tesla in here. I'm still going to be scaling a lot of these. Tesla's the only individual stock I'm holding in. Well, I got small caps that I don't show in here too. I mean, I do have some other individual stocks, but at scale, and what I like to show at, just for cost averaging, and trying to be appropriate is, Tesla's the only individual stock realistically right now. And I'm comfortable with that, which is insane because Tesla arguably has more risk than Google does. But I have a much clearer path, I think, in 5 years where Tesla could potentially be, if their business models continue to get better. However, let's talk about things like Starbucks real quick. I think these stocks were like, this is where I kind of come into that frame of, because people like PPC Ian, I always found it interesting because like these guys come from a different, completely different perspective. They come from a perspective of, I don't care about my capital gain value. I only care about dividends. And that comes from his mouth. Those aren't my words. He literally says that I could care less about capital gains. I just want cash flow to continue to grow. So he doesn't care that Starbucks has dropped. He's continuing to cost average into it. It's one of his largest positions. And there's nothing wrong with that. Some people are dividend oriented, but I just don't have that in me because I've seen the vast majority of my wealth come from capital gains. And income's always a proponent, but you have to imagine that if you are 20 years old and you went back 10 years ago, would you have rather bought in something like, Google or an Apple or an Amazon, or would you rather own, something like a Starbucks here? And Starbucks did exceptionally well. I mean, you go back to 2012 and don't get me wrong. I mean, you'd be up hundreds of percent, but that's nothing compared to the 1,000+ percent you would have been up on Google and Apple and all these other companies, which is why I try and find a nice healthy balance between the two. And even in retirement, I still think capital gains do matter to some extent. As I've told you guys, like, you can't get away from this kind of combined return thesis. I think balancing growth and income matter a lot. I mean, Dave Ramsey touts that. Warren Buffett is even just saying buy the S&P 500. I mean, you get these legacy investors that, recognize that there's some combination that has to kind of come into play, which the S&P gives you. I know it's only 1.5%, but that dividend does grow very nicely, especially with all these mega cap companies increasing their dividends. Now, I got nothing against Starbucks whatsoever. I'm curious if you guys think it's a buying opportunity here, because typically when these companies dip, they are a buying opportunity. But I think for the first time ever on a global scale, Starbucks is starting to see that pullback basically in shoppers, right? And I think that's just a sentiment that, Starbucks might not be that recession proof. I don't think it's going anywhere, but it's certainly not recession proof. And there's certainly a lot of competition for coffee. I don't know, people, I think Joseph Carlson was saying that there's like a coffee bubble, that there's just so much competition for coffee that some of these companies are highly inflated on where the future value of their businesses might be. And that could start coming into fruition now with Starbucks. I don't really know, because like I said, I don't understand it as well. Whereas I do think that, companies like McDonald's stand a much better chance, because I kind of get the consumer sentiment behind that, even though McDonald's is also getting expensive. But I don't know. Time will tell. We'll see what happens. Let me just take a look here, because I also wanted to just abbreviate the Toronto Dominion Bank, because we do own this stock on an individual basis. My fiance owns it. Again, not a huge position, but when we buy like VDY, which is another big position to some extent between her portfolio and mine, we get a lot of weighting on Dominion Bank, and I like that. To be honest, I think this is kind of it's not a good abbreviation, but I feel like Toronto Dominion is having its Wells Fargo moment right now, because these banks, they go through ebb and flow of issues like this. And honestly, Wells Fargo got devastated, whereas TD is not really getting hit that hard. But again, keep in mind, Wells Fargo was doing nefarious things within the company. This was more about gang crime. People were being bribed within the company, some managers, and there's systems that I think the DOJ forced them to set regulations that were set up, didn't catch the fentanyl, guys that were laundering money. And I don't know how you catch laundered money anyways. How do you find out someone's laundering money? I mean, if I own a bar, if I've got anything like a pizza joint, or anything that does a large amount of cash dealings, a salon, I mean, I could cash launder that money all day. I don't know how somebody figures it out. Not that I'm laundering money. I mean, I've watched Breaking Bad. We all know how money is laundered. But still, I don't think it's as materially impacting. I mean, it could be a one-time, account loss of a few $100 million or something. But at the end of the day, it's a $132 billion bank, right? And the other issue too is obviously they've also had their nefarious things going on beyond gang crime and fentanyl and drug money, because TD banks, they're saying that analysts warns of potential higher fines from U.S. money laundering probe. They had other fines as well for other reasons. There's been so much going on with this bank that they just can't get ahead. This laundering headline is just a new one. Let me take a quick sip of water here, folks. Yeah, I just don't see it being as like, these companies just go through it, right? You can't argue that the account, it's not like everyone's going to do a bank run. At the end of the day, that's what you have to get for a bank to collapse. That's why banks are so damn safe. And that's why they're like Pokemon cards. You got to collect them all. I keep telling you guys this. If you're looking for income, look no farther than like the H Bank ETF, JP Morgan, Wells Fargo, like just to own these banks, right? Because I mean, even if they correct dramatically, if they're one of the mega banks, if there is a bank run on something like a Wells Fargo or like, a Royal Bank or a JP Morgan, you're screwed. You're so screwed. It won't matter what happens next. I'm just saying these things are too big to fail, right? It's just a matter of insanity. And somebody made a good joke here that I kind of like, or just a comment. Fentanyl, money laundering, Chinese gangs, the trifecta of horrible news. I bought 50 shares today. Call me crazy. I was like, the best comment. I'm like, I agree with it. Just the banks, it's easier to own the diversified ETF of them and just cost average, but like, I mean, anytime they drop, they tend to be a buying opportunity. And they are, I mean, you get huge yields off these banks right now. Like, unbelievable. Like, and it's Vic Gill always coming in with the funny comments, because your fiance owns it. It's a reason enough for me to own it. Her meta. Like, yeah, I know. He's joking that, TD stock, right? If she owns TD, I'll own it. Like, because my wife is more stable than I am. Let's get into some of the comments here, and then we're going to head into talking about Jerome Powell that really saved the market, I think. Considering we're not getting interest rate cuts anytime soon, I think Jerome Powell is definitely saving the day here. But let's get into a few comments first. Basically, Chronicles, which let's get into this here real quick, folks. I have 2,000 shares of Zeb. Love that monthly drip. Yeah, honestly, I would recommend, not financial advice, look at H Bank. It's probably worth transferring those shares over to H Bank because HBNK is the ticker. Right now, there's zero management fee. And when they introduce a fee, it's going to be 0.09%. And it's the same thing as Zeb. But I think Zeb has a like double or higher the management fee. Either way, I'm not saying you have to sell it. Zeb is also a beautiful ETF. What's up? What's up, my guy? Long-term TD fan here. Let's go. Rocket Labs. I'm not the biggest fan of Rocket Labs. If you want small cap risk, it's a fun one to play with. I wouldn't. It's one of those companies that you got to recognize you're kind of speculating with pretty dramatically. I mean, they do share dilution. Like I said, the formula toward major success in stocks that you're going to own is they're going to be able to grow revenue. They got to be able to grow revenue. They got to be able to buy shares back, and they definitely should be paying a dividend. You get companies like Apple and Google and Amazon, like even though Amazon's doing some dilution, they're doing it to pay down debt. When you got to get companies that like they almost have a guaranteed return because they can buy shares like Apple did. Rocket Labs, like I don't think there's anything wrong with it if you love space. It's a fun, easy way to own it. But like I said, when you look at how much money they have to spend on R&D, research and development, when you look at how much money they have to spend on marketing and administrative work, when you look at how much dilution they do, you have to recognize that there's a reason that those stocks historically go down because that is an unsustainable metric for growth for an unprofitable company. Kind of reminds me of like biotech. Like you have to, with biotech, you're supporting a cause more than you are, owning a stock really. Like you're really just taking a full-on speculative bet. Look for a mustache caked with icing sugar with bags of money and deposit slips in hand. Palantir going to zero? Maybe, buddy. Maybe. Who they ton bought? I backed the truck up to the TD. Good job. Good job. Starbucks is just one of the first. Again, it could be a huge buying opportunity. I just don't understand Starbucks because I think it's just not my vibe. It's too expensive. I always see the new dividends as misdirections for poor earnings. Yeah, I don't think so, though. I mean, you look at Apple, like, frig, when I owned Apple, it was paying a 2 or 3% dividend. By the time like I owned it, when I sold it, my yield on cost on the original shares was almost 5%. I really don't think, I think great companies can pay dividends. I think it's actually, I think it's a point of healthiness within, if you have so much damn money that you don't know what to do with it, and you have the ability to buy up any bottom half S&P 500, like Google could go out tomorrow and buy Palantir and like a ton of other companies. I mean, when you have so much money, what's the most appropriate way to offer rate of return? Well, why don't I make the shareholder richer by buying back shares? Why don't I make the shareholder richer by giving them a little bit of expenditure capital so they don't have to sell the stock and they can kind of believe in us? Because we're still going to have so much money left over. We can still buy a lower half S&P 500 company and still perpetuate endless revenue. Again, I mean, you have to understand that I'm not a fan of dividends as a total focus. And if you are totally focused on them, then go, again, look at the banks. There's so many good dividend companies out there, I think, but in a diversified manner, they're great. Not on a huge individual basis. But cash flow, Chronicles was City, I closed what's your opinion on Chipotle stock? No idea, bro. Chipotle, I haven't eaten in Chipotle in forever. Just forever. A lot of TD comments. Anyways, let's get into Powell here. ExxonMobil. Yeah. Evening traders. Let's do it, baby. Let's go. Will GameStop keep rocketing? Every time I see GameStop, I get a tear in my eye now. Every time I walk past GameStop, I get a tear in my eye. God, man, if you guys lived through 2021, oh God, 2020, 2021, what a year to be alive. What an odd year to be alive. Anyways, Jerome Powell is really bringing the market. Jerome Powell is the new GameStop, all right? He decides whether we pump or whether we dump here, folks. So I'm 22. My portfolio is 50% Amazon Mall. Yeah, I'm not going to argue that. Anyways, when I was 23, I was all in marijuana stocks.
I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead.
This is what he says every meeting. It never changes. The end comment is what got us
on that. In terms of your question, your second question was stagflation.
This is fun.
I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have.
Could you imagine if one of the U.S. presidents acted with like such amazingness as Jerome Powell? I think like the most respectable person in any kind of government, fast, not even though I guess federal government, right? It just, you got to respect the guy, man. He's just, very data driven, very analytical, straight to the point. I love
and very slow growth. So right now we have 3% growth, which is, pretty solid growth, I would say, by any measure.
Just pumping. Look at
we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say, most forecasters, including our forecasting, was that that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%. And that won't be. So I don't see the stag or the inflation, actually.
That was the joke. I kind of talked over.
I don't see the stag or the inflation.
I don't see the stag or the inflation, actually, baby. We're going to run this market to the moon. Like he's just, you got to love this, Jerome Powell, man. Name one time in your history that you ever gave a shit about who worked at the Federal Reserve. It's just funny how like the fixation of investors just shifts from these topics over time, right? But yeah, obviously inflation is going to die. I know a lot of people, I see it in the comments all the time, they don't think interest rates are ever coming, or the cuts aren't ever coming, that we're just in a new world of higher rates. And I don't believe that to be true. I think if you watch over the next 3 years, as soon as they start doing interest rate cuts, they're going to keep cutting them for a long time. I wouldn't be surprised. I don't know if we get back to where we were at zero. I highly doubt that, because that was primarily driven by God knows what. I mean, but I can't imagine that, it stays high for much longer. I imagine I would expect, my bet has been sometime in the summer or fall we see the first cut. I was hoping by the summer, but I figured at the worst case it'd be around fall. But from there, it's just going to be consecutive cutting, probably for some time with maybe some breaks in between. And we'll get back down to lower rates, and then the market's going to be even more fascinating. Because again, I hate when people just presume, they're like, oh, if they drop interest rates, it's going to cause inflation. It's like, does it though? I mean, interest rates were at basically zero for the last decade, and inflation was in check. I really think it only benefits and stimulates the economy. I mean, look at the growth, and look at the insanity of where we came from 2008, right? Let's the interest rates stay high. I have no debt, no mortgage. You join the club. Well, I want to get to the debt, no mortgage club. It's going to take a little bit, but we're so focused on building our tax advantaged accounts right now. But yeah, I mean, you're like me, man. Like if you don't have any consumer debt, and even if you have consumer debt, do you care that interest rates went up? God knows consumer debt sucks unless you have a really good line of credit. I mean, you're already probably paying a 20% interest rate. People like, cars, loans, all that crap. I mean, my mortgage sucks though. I'm at like 5.8%. I'm living it up there, baby. But don't worry, we'll probably fast track it and have it paid off in 3 to 5 years. It's that constant debate, right? Do I put it in the market? I get a much higher return out of the market and just carry the mortgage, because I'm still making more than 5.8%. I just hate debt. I'm like you, brother. I can't stand it. But congrats. Holy shit, man. You got to go on Dave Ramsey and do your debt-free scream, baby. That's the life I want right there, man. Just get close to $1 million in the bank and a paid-for mortgage. You're good. You're set. That's like FU money for days. Hell, even just having a paid-for mortgage and no debt is basically FU money. I mean, this is though it's funny about like living in Toronto. I just listen to how much people are saying it's so hard and it's so struggling. And I don't get it, because so many people like have their mortgages paid off. And I'm like, and I see all these BMWs and all these Mercedes and all these crazy like lifestyles. And I'm like, I could very functionably live off like probably 20 or 25,000 a year if my mortgage is paid off. I'm like, that's for everything. I mean, I'm talking like my phone bill, my car, the cost to carry this joint. I'm like, I could easily get by on like 20. Okay, so maybe I might need like 30 for taxes, an extra 5K just to pay for the taxes. But I don't know why everyone makes it out like life's so goddamn expensive unless you are living in consumer debt. But yeah, I don't know. It's too much, man. So it's crazy how the market follows us every word. I know, right? Good old Jerome Powell. I'm in my 30s and I paid off my house. My car is 15 years old. That is one of many reasons. I had a guy in our chat group message me, and we were talking about cars because he wants to do what I did and, find the cheapest, most frugal car he can own. Because hell, even in Toronto here, man, I think my car is costing me, it's probably one of my most expensive, well, it's everyone's most expensive thing, but I think it's like $450 a month or something with insurance. And I'm like, I own my car and it's costing me $400 to $500 a month. That just seems nuts to me. It seems crazy. And I'm like, and I couldn't imagine a BMW. That's got to be like a $1,500 to $2,000 a month payment just to feel good. You still hold crypto? Yeah, we still hold crypto. Actually, I sold my dad's crypto. He got into some of the promotions that we had with ShakePay and stuff, and it was so funny. Picture my dad there, like the most untech savvy guy you'd ever meet. I'll tell you a funny story about this handyman of a guy. I mean, he reminds me of he's a great guy, but sometimes the humor is hilarious. He'll kill me for telling you this story, but I mean, we were over there. They bought a new place for their retirement, all this stuff, and my dad's stud finder's not working, and he's going across the wall. We're trying to hang the TV on the wall mount. And like the stud finder's not working. So he's like, oh, I can just tap. And my fiance is sitting on the couch and she's like, are you sure that's how it works? It all sounds the same. He's like, no. I'll find it. And my mom's like, you better not put extra holes in that wall. And he's like, I got it. 4 holes later, he finds the fucking stud. And so we call him Stud Finder now. We couldn't stop gutting ourselves. It was so funny. But this completely untech savvy guy, like this is the only guy in the world that I met that got a virus on his cell phone. He's got ShakePay set up and he's collecting crypto every day. And he's like ShakePaying it. I'm just like, the dude's got more into crypto than I did at the time. And anyways, he held it. He held it through the ups and the downs, and then he made some money on it, and we sold it for him recently. Like it's fucking hilarious. But good for my dad. But yeah, we still hold a little bit of crypto. I don't even look at the wallet, to be honest. I think it's total Ponzi. We'll see where it goes. I'm gambling with it, sure, but I don't know how anyone thinks it's anything other than a Ponzi. The only thing that keeps crypto alive, international money exchange for mostly probably illegal stuff, and that's about it. I mean, let's be real. Outside of like international money movement and which is extremely volatile to take the risk of moving money internationally that way. It's just a Ponzi pump. You got to be careful what you're doing there, man. There's a lot of good cryptos though. Like, there's companies that have partnered with Royal Bank and Google actually on using crypto as the back. You wouldn't even know it was crypto, but they're using blockchain to basically allow micropayments. Because if you ever go into a store, most stores, especially in local towns or like remote areas, they don't let you accept visas. You can't accept visas under like $5 or $2. So like they're building systems right now where you can start doing micropayments for like up to a penny. And, the provider will still make money. And that's all going to be crypto driven. I think there's, like I said, NFTs, that stuff's coming. It's just Bitcoin in and of itself is one of the most fascinating, discussions, I think, in the world. Bitcoin will be worth a house. Maybe, like I said, we're gambling on it. I'm holding, the wife and I are holding a little bit. Again, nothing materially impacted, but if it goes up 10x, like, a little bit goes a long way. You just don't know that though, right? If Bitcoin will be worth a house. It's only on the presumption that people, like, again, most people buy Bitcoin to hold it. That's it. It's not a good asset. I don't even like gold because you just buy it and hold it. I get it for so many reasons though. Like I get the decentralization, I get so much, but why? Like you can't spend it. It hasn't like come into fruition in any way that it was initially intended for. It's kind of just taken on its own life form, and it only exists because of the Silk Road. It literally only exists because of the Silk Road. I can't imagine that Bitcoin would even, I wish we could go back in time and just wipe out the whole entirety of the Silk Road. And if you don't know what that is, go watch a documentary on it. The guy that created it would be probably the richest person in the world today. Cause I think even back in 2013 or 14, how far into it was it? It was still, the early teens, but he was worth 400 million in Bitcoin. And that was back in its infancy stage. So, I mean, the dude probably would have been worth tens of billions of dollars today. BlackRock is buying 1050 Bitcoin per day. The miners can only create it, but it's artificially pumped. And now you're like completely relying on a centralized, again, the whales control the Bitcoin price. If they ever decide to dump, I mean, you're in trouble, right? There's really few people that do control the entire structure behind Bitcoin. If they ever decide to liquidate in a major way, you're screwed. It's a Ponzi scheme. If just more people want to sell it than buy it, it drops dramatically. I mean, it's a very volatile asset. So you're just always going to be presuming that more people in the future want to buy it. I don't want to get in the Bitcoin argument here. I could see it. I don't think it's a gold replacement. I do see it as a replacement. I think something better has to come out than Bitcoin. I don't think Bitcoin's great for a lot of things, but I think what it is great at, it's better than the current monetary is. Like, it's better at being decentralized. It's better at moving. It's better, cheaper at moving. Like, there's a lot of things about it that are better, but it ain't being used for those reasons mostly. Kyle, ever looked at Hammond Power Solutions? No, but I will take a look at it, and I'm going to finish up with a few more questions here. Crypto is how TD should have helped its drug dealing clients launder money. I'm not saying Bitcoin's purely used for drugs anyways. I'm just saying the onslaught of Bitcoin was for mostly legal shit. I think dollars are more used for legal shit than obviously crypto has been. I'm not on that side of the fence. I'm not with, JP Morgan, Jamie Dimon. Have you ever looked into this TIH? No, I have not. TIH, it's not perfect money. Nobody uses crypto for money. Don't kid yourself. TIH. So let's take a look at a couple of your stocks, and then I'm going to get out of here, folks. You're talking about Thermont Industries, eh? Let's take a quick peek at this one. If this is, presuming you're talking about this stock. Let's see. It's been going to the moon. Definitely going to the moon. You got a good 10-year track record here of a company that is trading up, a few hundred percentage points. Probably some conglomerate. It looks like it's revenues, earnings trading down a bit. No, it's got some decent revenue growth behind it. Gross profit's really nice. Looks like it's getting about 20% gross profit margins. No dilution going on, really. Looks like a pretty stable stock other than the revenue got hit. So you might want to ask yourself why in Q1 it's getting hit. Earnings per share. Oh, sorry. Am I not screen sharing this? My bad here, folks. Let me pull this up for you real quick. Sorry, I'm just bleeding through this stock. And I feel like I'm going to be boring a bunch of you here. I don't know what this does, man. What kind of company is this? It looks pretty good, though. Their financials look fine, just from a brief look at the statistics here. Operating margins are pretty decent. Return on equity is decent. Payout ratio is super low. This looks like an all-around good company. I'd have to look into see what they actually do, but from a balance sheet, I'll have to take a deeper look. Anyways, folks, yeah, so just to summarize, I think next week for the remainder of May, we're going to be getting into the Canadian earnings with a lot of the banks and stuff. We did see some Canadian earnings like Canadian National Resources, but when it comes to Google, folks, yeah, I'm out of this position just for now. Like I said, it's weird. I honestly think Tesla's going to be a cleaner position for me over the next 5 years than Google might be. One day I might get back into it here soon, but if I had to own something today, I'd rather own Meta. I honestly think Meta is the better stock. I think Meta has more to gain. I think it's a better value play than Microsoft is today. Like I said, the only reason I wouldn't take my Google position and put it into Meta is because we already own Meta. And yeah, I don't think there's anything wrong with Google either. I think Google's going to be around for a long time. I don't think they're going anywhere. I'm just really worried that one day that news article hits, the stock could drop 50%. If they ever start losing market share in the next 1 to 3 years, they're screwed. They have to give it a good 5-10 years to let these other aspects of their business catch up. But I don't know. Like I said, it's something that I can't predict, and I know it's coming, and it's coming. It's an inevitable catalyst for the stock, and it's either going to be huge or it's not. Whereas, at least with Tesla, I understand that self-driving and just one of these things could be worth what the stock's pretty much valued at today. I wrote a Seeking Alpha article on why Google will be $185 by end of year. It's going to keep going up this year. I don't think it's going to go down by any means. But again, the S&P 500, right? Like, I don't have to gamble. I can still own it. Now that my S&P position is just kind of getting a behemoth, I'm long 400 shares. Awesome. Otherwise, folks, I do appreciate y'all coming out tonight. Stay cool. Stay awesome. We'll see where the markets take us next week. Peace.